Hi, good morning, everyone, and welcome to 38th episode of Let's Talk About Market. Today, if you see the Nifty index, it is going up and down and it is more or less flat. But the interesting thing is that we are into the expiry today, that is the monthly expiry, and there is interesting option data that I have observed, and I think it's worth talking about that. And moreover, it's worth even talking about the short-term setup, and many of the index, basically, the ones that were outperforming, underperforming, that we discussed yesterday. That is what I think will be the highlight today, and we'll discuss and dig more deeper into this. And of course, today is the monthly close as well. So need to see where is it that the monthly RMIs are coming into bullish zone or bearish zone. So these will be the other things to watch out for. Okay, so basically, all this will be the discussion point today. So let me quickly share my screen, and please let me know once you all are able to see my screen properly. Okay, just put it in the comment box if you all are able to see my screen. Let me check the settings. Yeah. Okay. Are you all able to see my screen properly? And more importantly, are you all able to hear me? Okay. Thanks, Pramod, for the confirmation. So let me quickly get started. Basically, firstly, when you look at the Nifty index on the hourly chart, you call it a triangle, you call it a falling wedge. I don't know, but that is what it is possibly forming. Okay, you can see over here something like this is being formed. Okay, so what we are actually seeing is that the momentum is rising higher, but the prices are falling, and that is what is leading to divergence. So in this case, this is called as positive divergence, and in fact, even if you see it on RSI, okay, we are able to see that divergence in RSI as well, where the prices have made lower low, but the RSI is slightly inching higher. So the expectation over here will be that at some point of time we get a bounce. But I spoke this yesterday as well, that we need a daily positive close. Yesterday it looked like that there will be a daily positive close, but we eventually fell down. I mean, that is it. But as I was mentioning couple of days back as well, when swing, average swing, both of them come towards the oversold zone, more or less we end up either seeing consolidation or sideways move. So swing, average swing, both of them came to the oversold zone on 26 September. So far it's 2 days, I mean it's 1.5 day, and we have seen sideways movement so far. Okay, what this leads to is some sort of premium meeting that can happen during expiry. So this is where this information becomes very important to understand and analyze before taking a position. Okay, so now the ideal setup would be that, given that on the hourly charts I showed you that positive divergence is witnessed, and swing, average swing, both are at the both were at the oversold zone, and now they're slightly inching higher. So the expectation will be that there can be some bounce in the market, right? Now the question again that will come is that to what extent can we bounce back, right? So in such cases, what I would expect is bounce back probably till 20R to start with. Okay, if this breaks on the upside, then 40R and the upper band. Okay, so whichever is higher among the two, that will be the level to watch out for. It's only, I think, if the Nifty index starts trading and sustaining above the 40-hour exponential average, that's where we think of a retracement. But other than that, if the trend is very strong on the downside, then maybe even the 40-hour may not break. I mean, you might just get a pullback till there, and then again it will sell off. So to what extent will it pull back? It is difficult to say at this point of time. But maybe sooner or later we should be getting a pullback. because now clearly we can see that the momentum on the downside is losing some steam. And yeah, so that is what the thinking is right now. And actually, if you see in Nifty index, we did not see a positive daily close, but you see CNX 500, which is the Nifty 500. Okay, over there we saw positive daily close. Wait, why is it CNX? Yeah, if you see the CNX 500, that is the the Nifty 500. Over there, you already got a positive daily close yesterday. Not a convincing one, but nevertheless a positive daily close. In fact, if you see in mid cap, we ended up seeing a positive daily close. I think in small cap, we did not see. Yeah, in small cap, we did not see a positive daily close. But in all these cases, either it is forming some sort of triangular pattern or a falling wedge pattern. Okay, in small cap, actually, you can see there is a little more room there on the downside. But if you see, say, mid cap, sorry, not this mid cap, some sort of triangular pattern, seems to be forming. And in all of these cases, what is happening is that the RMI is inching higher. Okay. And one more reason why I feel that there can be some pullback that we can probably see today is because when you look at the options data, okay, I was just checking this in the morning. So you can see I have not clicked on combine, which means I am purely looking at the data for today, right? And you're seeing a meaningful addition in 24,600 levels, okay, and you're seeing a meaningful call writing at 24,700. So I think this should be the range within which the Nifty index, should basically expire. It's if say at 1 o'clock 1:30 or something like that, if Nifty is trading below 24,600 or trading about 24,700, then that's where we can expect some sharp covering sort of rally. Either it can be call covering or put covering, whatever it is. That is what it can lead to if at all this range is broken by 1:30 or 2. Okay. But otherwise, the expectation will be that probably, the expiry can happen within this range. If you see the Nifty index, basically the 20-hour average, let's try to analyze. I mean, just want to check what is the 20-hour average at. It is at 24,747. Okay. So yeah, basically it needs to close about 24,700 and sustain above that to see that short covering rally. But even if you see today's low is interesting, it's 24,593. It is basically towards this 24,600 level, and that has acted as a support for now, and the Nifty index has bounced back from there, right? So this is another point that we need to see. Now, when we get the day end data, it will be very interesting to analyze, whether people have carried forward their shorts or no. But I was just looking at the rollover as well. More or less, it seems to be in line with the past averages. If you see rollover and if you see this for the Nifty index, it is 70 to 73% or so. There is still some time left, but more or less, if you see, it is around those averages only. So need to see, as I mentioned, by the day end how the rollover plays out. But yeah, I mean, it is more or less in line, so which means that people are probably carrying forward their shorts. So that's where again, it would be interesting to see where is the FI positioning at the end of the expiry. How are they placed? Because right now the shorting is somewhere around 1,70,000 contract. Okay, this is again at the lower end of the range. So see, at this point of time, what we have witnessed is a sharp correction, and basically it is 1, 2, 3, 4, 5, 6, and 7 days of back-to-back correction, right? So there can be some bit of pullback that is expected, but I don't see, a sort of a V-shaped recovery and the Nifty index rising higher. I mean, that is something that looks very difficult at this point of time. Okay. Uh, so at the max, what can happen, the best case scenario, what I can think of is a retracement. The 61.8% retracement would be, say, somewhere around 25, 126, 130 or so. That is the max I would be looking at this point, because there are few things that is sort of bothering me, and I think we had a discussion over this, but I'll just quickly rewind it. See, firstly, what has happened is that the RMI has not given us a bullish crossover over here. Okay. So until then, expecting a reversal may not be a good idea. I mean, what we can probably see is, some sort of consolidation happening in this range. And I will be a little more worried and scared if the Nifty index breaks and starts sustaining below the 40-week exponential average. Now, I'll tell you the reason why I will be a little scared. Now, as you all might be aware, after joining so many sessions, that usually when the RMI is in sell, the expectation will be that it might probably come back to the zero line. And then when it picks up, that will be the next leg of the up move, right? That is what we have been observing so far in many of the charts. Now, when you see the monthly data, this is where the problem lies. Okay, you can see over here that the zero line is not completed. So it is holding above the 20-month average, so which is this 23,950 mark. So that's where I am leaving this possibility open that if at all the 40-week breaks on the downside, then there can be that scope of a down move towards 23,900, 24,000 levels. If that starts getting challenged, and if the Nifty starts sustaining below that, then the bigger picture says that there can be this room on the downside where the RMI can go to zero line as well. Okay, and so far it has been extending from the 20-week. Okay, whether it does now or no needs to be seen. But when we are in that zone where the risk is open, we always need to take that into account, because please understand one thing, that if at all the up move comes and it plays out, then it would have a long way on the upside to go. Okay, but if we end up making some error over here, and the Nifty index say ends up falling to 21,500, which is what the monthly chart is telling us, then the pain could be real. Okay, so this is something that we need to keep in mind and we need to take a note of as well. So just to rewind the levels, maybe in the near term, this zone, so I'm not specifically highlighting the 40-month average, sorry, the 40-week, which is at 24,400, but it is broadly 24,330 to 23,400 zone that the Nifty index needs to protect. Okay, if that does not get protected and it stays below those zone, then be ready for something more worse that can happen. Okay, that is the limited point that I want to make. Now, if you see, we were speaking about the sectors as well yesterday, right? So if you see PSU banks, over here the momentum still continues to inch higher. In fact, we have seen some turnaround in metals also happening. And when you look at the chart, it looks like a textbook pattern. I mean, especially for PSU, went up. So I have kept this marking as well. Went up, pull back, and now it is inching higher. So this is a good sign. Even if you see Nifty metal, it seems to be consolidating so far above this previous high, right? And basically, this was like a short-term breakout sort of thing. So I mean, as long as they are above the 2040, it is fine. Basically, all you need to do is that you need to keep trailing it, okay? Because these are the strong ones. We spoke about Nifty consumer durables, right? And you can see that it has seen a very sharp decline today, almost 0.6. we had spoken about Dixon, where there was some I think negative crossover that we were seeing on the weekly, and this also continues to correct, and basically 40 days gone. So this is where what we are actually now, what I'm witnessing is that the ones which are strong, they are still okay. The ones which are weak, they are weakening very fast. Okay, and this is how I think the trend will play out, and that is where keeping an eye on RRG will be very very helpful to everyone. I would see that you can see over here the PSC, the momentum is falling, energy momentum is falling. Okay, so these are all the cases where they are into leading, but the momentum is falling. So here is where you need to be a little more careful. And the other thing is, be careful from something like this. Reality again now going down, and turning around, went to improving, didn't even come to leading. It went to improving, and now there is a risk of it going to lagging. Right. This is the case with media as well. So these are the laggards at this point of time where you need to be a little careful. Okay. And the last one now is that since this is the month end, you might want to see which are the stocks that are giving bullish or bearish crossovers, especially the ones you would want to see. So I'm just trying to narrow down it and probably take Nifty 500 into account at this point, and let's see if we are able to see some common factor over here. New sale. So it is Abbott. Okay, you can see that Abbott almost at the 20-month average. There is a sell crossover, not a good sign. Atul again below the averages, and there is a sell crossover, not a good sign. Bear crop, again similar pattern, right? Not a good sign. Coromandel. Okay, so Coromandel, you can see that there is still a lot more room left. So maybe you might want to see more on the downside. I mean, what is happening in the daily chart below the averages? Not good. But on weekly, it is almost at the support, right? And I don't know. Looking at the chart, it seems like yes. I'm just wondering if this is some sort of an falling wedge pattern or so. So okay, I mean the broader point is that this is not that bad, but again this is above the averages and this is happening, so not a problem. This is also not a problem. Okay, here there is some room there on the downside, but from a larger sense, these are not a problem because these are trading below the weekly, I mean monthly averages. Yes, they can probably test the monthly averages. That is the scope that is there, but not so terrible. Like, I mean, Abbott, Atul, Bayer, so far that we have seen, these are surely at some risk. So even if you see Page Industries now, it is almost at the support level and there is a crossover. Again, need to be a little careful in that. Similar in PI Industries as well, which has been outperformer for a very, very long time. But, lately it is not that great. Reliance between the averages, so need to keep a watch. Cement, re-cement it has come, but it's okay. I mean, mainly what I'm seeing is that there are some agri stocks that are coming into the play, right? I mean, it is this, not sure why the spike is, but yeah, Sumitomo Chemical, then Bayer, then Deepak Fertilizer, Coromandel. So need to see over there. Probably I'll spend some time and see what is happening over there, because agri stocks at one point of time were looking very good. So need to revisit those charts and see, if something dramatically is changing, or basically are we seeing a healthy correction over there. So yeah, basically that is it. And maybe if you have a portfolio or something like that, you have a watch list. Maybe today is the month end, so you might want to go through how are the monthly RMI and so on. If you want to do that, basically you create any watch list. So say for example, I have this watch list over here. Okay, maybe or say for example, even you if you want to check for the FNO stocks, I've created say baskets. Just go to those baskets. Sorry, in RMI, just go to those baskets. You can select. Now assume that this was your portfolio and you want to check over there. Simply go and check which are the ones that are giving new sell and how is the setup over there. Okay, if it's below the averages and so on, then it may not be a good thing to watch out. I mean, not a good thing to happen. So be careful of that. And given that we are at the time where there is a lot of uncertainty even on the chart that we are seeing. So be careful, and that's how you will be able to protect your capital as well. But this is probably the time where uh, being a little more defensive and not being way too aggressive is the mood of the market, I think, at this point of time. At some point there will be scare, there will be panic. At that time, probably you will see all this diffusion indicators and everything in this oversold for many time frames. I mean, right now it is in the middle and some time away from getting into that oversold. But the best opportunities will be when all this, even the medium term months, come to this oversold zone. But at this point of time, I think it makes a little more sense to be cautious. And in fact, I missed out on this, but the percentage of stock with RMI buy has fallen to 4. Okay, so basically now there are almost 4 out of 5 indicators that have come to this extreme oversold zone. So I think, I mean, looking at all this, I feel that a bounce sooner or later is possible. But as I mentioned, the max that I would think is a pullback of this decline. Okay, that's about it. And maybe, I don't know, I just feel that looking at the entire thing and the way data is playing out, uh, the pullback towards this averages can be a good time, probably to create some bit of cash and wait for the next dip to happen, somewhere around this zone, which is an important support zone. We need to see what Nifty does over here, whether it is then willing to turn around or is this more pain left. So that is what I'll be watching out for. And more importantly, today is the expiry. So I'll be watching out for what is the positioning of the FIIs post today's expiry and how the rollover data is playing out. So you will be able to see the rollover data in different views. Basically, it will be expiry to expiry as well. This is the rollover data for last expiry, but today by the day end you will be able to see all the data points over here. So this will be everything in percentage terms, and in early positioning you will see everything in absolute OI basis terms. Okay, so these are the data points that I'll be watching out for, and probably we can discuss them in lot more detail in tomorrow's trading session. Okay, so with that, I think I'm done for today. If you'll have any you know questions or anything, I can help them clarify. Mahesh ji says, if a stock is trading above its daily moving averages and the RMI gives a buy signal on a pullback, uh, let me check what you're trying to say. Let me open the chart. Insane. And if I put the setup, sorry, it's the trade setup. Yeah. So, Mahesh, in this case, basically what is happening is that whatever the bullish crossover that we had got over here, that move itself is playing out. Okay. But this new bullish crossover, does it warrant a fresh buy? I would not think so. Maybe on the hourly chart, this thing can trigger a buy. But I mean, that is basically, you're trying to play again this leg now over here. That is what I would think. But I mean, is it sign of strength? Yes, you can say that, because the daily averages are getting respected and it is rising higher. So in that sense, yes, you may want to call it that it is showing signs of strength. But nothing from a new buy perspective, that may not be the case. GP Kalu, I made the same observation yesterday as you. On monthly chart, momentum is still way up, but then observed in 2023, the momentum curve did not reach. We are in the similar zone, hoping we don't. Yeah, yeah, GP Kalu. So you're right. So in such cases, see, but I mean, the way to think about it is that if at all, those the Nifty index would have broken those important averages and it would have sustained below, I mean, it would have sustained above, say, this resistance zone, then I wouldn't have cared about the monthly being into sell. That is because the momentum is strong on the upside and none of the important levels would have breached on the downside, right? But given that that is not the case, I mean, that's where I'll now start worrying more about this thing. I mean, once we get past this high, uh, and the 20 week is also safe, then I wouldn't care so much about this, because then again I would think that probably the pickup has to happen, and then the RMI will continue to extend above the zero line only. So yeah, it's the level that is important. And yeah, and see, the other thing, I mean, this is something that is not there on strike, but something that I'm keeping a very close watch of is the dollar index. If you see that this is at the lower end of the range, okay, now this is where I'm just trying to think, I mean, will things get ugly or no? Because if it has come back to the lower end of the channel, and if it has to retrace this entire decline, right? Then, maybe, I don't know, there can be some panic that can kick in the near term. So that is, I mean, that is something that is on my mind, and that's why I am actually paying attention over here, okay, and being open to the risk that can this get worse? So that is basically the idea of why we should be open to the downside risk. On which page can we get OI future details for the Nifty? So for the Nifty, you can get it at two places. Either you go to the Nifty 50 page and go to futures. That's where you will get the chart and the table. Okay. As you can see that in the past 3-4 days, continuously there has been short built up that is happening. Or if you want futures of all the stocks and indices, go to future, go to OI interpretation. This is where you get the list of all the FNO stocks, and you can search over here, and you will be able to find, the symbols that you want to look at. Okay. Yeah, most welcome, DV. Any other questions that you'll have? Maybe the market mood is dull. That's why there are no questions as such today. But yeah, basically, the ideal thing will be that if we end up getting a positive daily close and we see some pullback, uh, that's where the next meaningful trade will lie, which means that uh, say for example, we get a positive daily close over here and we get a pullback, and then when it starts coming down, and basically then that's the play that we would want to play, because right now it appears that we are in that late stage of this decline getting over. So even if you will short, maybe it will be difficult to make money, and that's where maybe a little more patience is required for this pullback to play out. And probably, uh, s- the daily swing, average swing will help us to be a little more patient and wait for it to go back to 80 or 90 to see, whether the pullback is getting over or. Strike OI data is not updating. No, it is updating. Let me just check it. So this, as you can see, the prices, it's 101. Okay, let me just take it for Nifty. Okay, Nifty, it is 24,657. Let me take in Nifty future. Okay, this, if I take the September month, that is almost over there. So, I mean, TradingView gives the live data. We have a 1 minute snapshot. So it is updating. Yeah, Divesh, it is updating. Wait, I'll just. Oh, the minute is gone. But yeah, Deepak, I think the data is getting updated. Sorry, Devesh. I don't think there is a problem. Mm, can we see RRG of metal and finance versus IT and FMCG? Uh, okay, let me just check it. So you want metal? Let me remove, untick everything metal and financial services. Where is financial services? Yes, versus, which is the other one? IT and FMCG. Okay. So see over here, metal, again regaining back the momentum. So that is a good sign. Uh, Financial service, not that great because the momentum is dipping. Ideally, I would want to see the momentum rising higher. FMCG could be in that early stages of some bit of outperformance, because over here, at least what you would expect is, FMCG to probably move towards the improving quadrant. That can lead to some outperformance in the near term. But the main thing that you need to see is that the momentum continues to inch higher. That's where, you can get some outperformance. Now, whether FMCG will turn up and then go back to leading or turn back again from improving. I mean, that is something that we need to watch out for, because you can see over here this is happening, and the only little worrisome part is on the weekly chart. Oh, so as you can see, the Nifty FMCGs has now turned around this week. But till last week, what was happening was that it went up, and from improving, it was going down. So that's where, I was getting a little scared that it might come down. But now, as I'm seeing, there is some turnaround that is also happening this week. So FMCG can be an interesting one. So amongst the lot, metal is the one, where there is strength. FMCG, maybe some bit of outperformance can be expected. But you can see over here in IT, there is again a momentum pickup that seems to be happening. But at least on the daily chart, still there are no signs. Okay, at least in daily, it should start reversing for it to get interesting. But until then, I think it might just be end up being a laggard. So yeah, I think that's what I can make out when I see the RRG chart. Uh, oh, okay. Just give me today's time, DV. Sorry, I forgot to communicate with the team, and I'm not sure if that will be posted or no. Let me just check with them and get back. Really sorry. I just completely forgot that. Thank you so much. So need to view monthly. Uh, See, I think for monthly, all this takes a very, very long time to turn around or see something like that. Okay, so in FMCG, as I mentioned, in monthly, there is some momentum pickup that is happening, but for the monthly RRG to play out, it might even take 6, 8 months. That's why I don't know. I would want to get so far from there. But as you can see, the metal sector looks definitely interesting on the monthly one. But apart from that, there is nothing noteworthy of the monthly RRG. But as I mentioned, even if the metal keeps correcting 5, 10, 15% also, the monthly RRG will take a lot of time to move. So, just keep that in mind. Only if you have patience, then you look at monthly RRG. Else, it doesn't make sense. I think sticking to weekly is the best one. In March, April move, all the sentiment and diffusion indicator were in oversold. Now, if it gives one more drop, then all might align, right? So, actually, Mahesh, we have seen this already happening, basically. So, let me just show you. Acha, okay, I understood what you're trying to say. So, over here, everything was aligning, right, from in the oversold zone. So yes, you're right. Maybe even if we end up seeing breadth also towards this zone, uh, the 40-day breadth also coming to those oversold zone. Actually, it is already in. I mean, approaching that oversold zone. So see, this ideally is not a bad level, but the way the market structure is playing out, I think there can be still a little bit of dip, and that's where we need to be open to 23,900 or so, which was also the monthly averages. I mean, that is probably the worst case scenario that I'm thinking at this point, because if that happens, then maybe you will have this AD ratios moving to somewhere over here, and even the diffusion indicators, that is the percentage of stock with 20, sorry, forget about 20, but this 50, 100, 200, maybe 200 might not come, but 150 might come to this zone. So yes, the no more the number of indicators coming to the oversold altogether, I mean, there will be a much better chance of a meaningful bottom that can occur. Right now, some indicators are in oversold, some are not, and they are still telling that there can be some more room that could be left on the downside. So yes, you're right. If we get that March April kind of move, then nothing like it. I mean, where all the sentiment goes to the oversold zone. Ideally, that will be a nice time to look at the markets once again a lot more aggressively. At this point of time, you make your positions here and there, and try to earn a bit uh, from those small moves. But as of now, there is no major move that I can see that can happen in next, say, 1 to 3 weeks or so. It's only when certain retracement level breaks on the upside, or 24 400 350 mark breaks on the downsides. That's where we might end up getting some meaningful move. Else it will be a slow grind. Maybe it might be tiring as well. So, yeah, I think with that, I've tried to cover all the questions. We are also around 11. I mean, the time is 11:38. So, I think we can wind off for today and probably hope for a daily positive close today, so that at least we end up getting those pullback, because the slow grind sideways consolidation is painful, and it doesn't give us any opportunity as well. So yeah, let's hope we get a positive daily close and we get a little more trending move in the coming days. So thanks once again for joining, and let's catch up tomorrow and see how the market unfolds.